When you raise money, you become a fiduciary to those people's money. I don't want to say stop being a real estate investor, but you become a financial institution. And that is a major responsibility. Nick just asked me a great question. This was something I get addressed a lot. Why have my wife and I not raised capital? How have we not raised capital? We can talk about all this in this episode here. How have we built 131 rental properties as private investors without raising capital? Will we ever raise capital? The difference between the syndication model, which is I raise money from investors, versus the private investor. What do we do? Why do we do what we do? What should you do? That's what we're going to talk about in this episode.
You're helping people find investment properties through the Stephan Group. Mm-hmm. That's great, right?
But our real estate brokerage.
Here in Michigan, yes, which is doing great right out of the gate, which is crazy. How many agents do you have right now?
Four agents.
4 agents already.
We launched so it's February. We officially launched like end of December. Power social media, guys. My wife has already personally done almost 8 transactions, and she's got a $1.55 million 12 unit under contract for a client, and then just submitted today for a $1.4 million 7 unit. So we are blessed to do very good, but see, power social media, guys. So I'm telling you, if you're a real estate agent, real estate professional, people don't know you, they can't flow you. You got to be on social media, dude. I was only able to create this brokerage because of social media. So many people kept reaching out because of what we're doing here. And they're like, could you help me? I'm like, how can I help? I'm like, you could sign up for my business coaching program, but that's 30 grand for the year. If you're like just trying to get your first rental, that probably doesn't add up. I'm not doing a course in real estate. I've done courses in telehealth, and those are great.
Just watch Tony's YouTube.
Yeah, right. Exactly. So again, not saying this to impress you guys, but to impress upon you, social media is today's business card. So you got to do social media. I have admiration for syndicators. Gideon Pfeffer, who's been on our channel, just talked to him yesterday. Plethora of knowledge. I have such admiration for what he does. Robert Martinez, a mentor of mine, admiration for what he does. Grant Cardone is a syndicator. I am different how I got into real estate. It was never my goal to get into real estate. My goal at first was to be a registered dietitian, which I am, be a personal trainer, which I was, own a gym. I was going to be the dietitian, hire personal trainers. I was going to do all the nutrition coaching, maybe run a boot camp here and there. And that was the dream. And I hired a mentor, Bedros Koulian, who I love, mentor to this day, and he said, go bigger. Start an online business. Don't own a gym. Don't be confined to a location. Start an online business. I, at 26 years old, charged up my credit card because I didn't have money. I don't come from money. If you don't know my story's out there, but mother was a drug addict. We almost lost our home to Chapter 7 bankruptcy. We were on food stamps. My dad held down 3 jobs. My dad tried to be a real estate agent in, what year is that? Oh yeah, 2008. So the worst year ever to be a real estate agent. I think he sold 1 home. He tried, it just didn't work. And we were financially insecure. Real estate investing, you might as well have told me I was going to go be an astronaut and go to Mars. Never thought about it. So when I started my online business, I poured everything I had into it. My goal was just to be a millionaire. And I don't say that again, like egregiously. I just wanted to be a millionaire. I'm like, hey, if I make $1 million, I put $1 million in the bank, because revenue feeds the ego, profit feeds the family. So $1 million in the bank, I'll be set for life. I became a millionaire at age 28. I poured everything I had into it. I put everything I had. I gave up everything to hit that goal. Helped a lot of people, but lost my health, lost my relationships. My wife was there through the whole thing, but gave up holidays, gave up weekends. I gave up everything, and I grinded and I did it. And that company did millions of dollars. I lived below my means. I knew what I was doing was unsustainable. I knew I was going to be able to do what I was doing for the rest of my life. I wasn't super passionate at a certain point. There was only 30,000 registered dietitians who I could have targeted with my business. So that's not a big runway at all. And I asked my mentor, see the power of having a mentor. I'm like, Bedros, what should I do? I'm seeing people invest in stocks. Crypto wasn't really a thing. I'm like, real estate. I own some rental properties. I think knowing what I know about you being an entrepreneur, you should look into real estate. Led me to Grant Cardone book. And I didn't know what I was doing. I bought my first rental property in 2021. I thought naively, when you drive by these massive apartment buildings, I'm like, who the fuck owns that? I'm like, how does one person save up enough money to own these massive buildings? Majority of massive buildings, if they're not legacy plays like father, passed down, they're syndicates. I was so naive. I didn't know people raised money to go do this. I thought you had to make a bunch of money and start investing and then work your way up. It wasn't until I owned probably 30, 40 units that I learned what a syndication was. So to be totally transparent, I didn't even know what a syndication was. I thought this was the only way to do it, was to use your own money.
Why haven't you and Andrea started a syndication, especially with all this interest around investing with you guys?
We have considered it, but I've studied a lot of very successful people. And we've talked about Ben Mala on this channel too. I've reached out, I've had mentorship from Ben Mala. Ben Mala owns like $500 million portfolio just in his family. Started the same way I did. When you raise money, you become a fiduciary to those people's money. I don't want to say stop being a real estate investor, but you become a financial institution. And that is a major responsibility. I'm not saying we won't ever do it, because we do get a lot of interest because we've documented our success. For me, it was extremely important that if I'm going to ask you for money, if I'm going to ask Nick to throw in 25 grand, 50,000, $100,000 on a deal, I better be able to say I've invested millions at this point of my own money. And I believe in the product so much that I've put my own skin in the game. Like I said, I've got nothing but admiration for syndicators. I don't like the people who are just doing it to get rich, to get wealthy, who have never put their own money in the deal and charged acquisition fees, disposition fees, management fees. And I'm not talking property management, I'm talking asset management. They go hire a third-party manager and charge an asset management fee who they don't put their own money in their own deals. They've never even bought a single family or duplex, or they just saw a quick way to make a lot of money with OPM, other people's money. I don't agree with that. I know if you're going to ask someone, and this back to personal training, I wasn't sloppy, out of shape, overweight, and asking you to do burpees. That's hypocritical. I think with syndicators, what scared me away, and again, scared me away, was the financial burden that brings. That is the teacher's life savings she's giving to you. That's Mrs. Jones' retirement she's giving to you. That's the plumber's 25 grand. You know what I mean? And of course there's a difference of accredited versus unaccredited, but that's a very big burden. And if you don't know what you're doing, you can lose people's money. And go Google syndicators who have lost money. It's a scary thing. I think that's what has deterred me a bit, is the burden, is the financial responsibility. I already have enough pressure as it is. It's my wife and I's money. Now, what if I had 20 other investors? That's a whole new level of responsibility. And knock on wood, I've never lost my own money, but things happen in real estate, and we have a track record and knowledge now, but that's where I get weary. And that's where I wonder, how are these people? Because it happens, dude. People raise money and they've never done a deal before. They don't have any track record of their own, but they get people to give them money. That's what's always made me think.
Is there ever going to be a time where, say, you and Andrea own 1,000 units, you have a good track record, you haven't lost your own money, that you're going to feel more comfortable? Or do you feel like you're always going to hold that kind of opinion towards syndication?
That's a great question. I'm considering it right now, and I've built an interest list. We built a form on our website. Would you invest with us? How much? Blah, blah, blah. But I know the reality, Nick. I know real estate is a very slow way to get very, very wealthy. Just today, because I look at our bank statements every day, because what you pay attention to gets results. I said, Ange, what's this $8,000 charge? Snow for 2 properties, a 7-unit and a 12-unit. 12-unit we sold. It is what it is. I mean, we're not going to go push the shovel. I know that real estate early on doesn't make a lot of money. It's a long-term play. You're investing for the long term. You're investing to say, I know I'll raise the rents. I know I'll boost the NOI. I know I can refinance this down the line. And especially when debt was 3%, dude, totally different conversation. Because debt is so low, the relationship between profit and debt is very important, because anytime you buy an apartment, you have to meet what's called a debt service coverage ratio. For every dollar you borrow, it needs to produce $1.20 on average in income, sometimes $1.25. When debt's 3%, great, because your debt payment's so low. So your ability to meet that hurdle, debt service coverage ratio, does that make sense? For every dollar I borrow, I need to produce $1.20 in income. It's so much easier. But what's debt today? 6, 7. Andrew just got a quote for one of her clients, 8%. Is it coming down this year? Are we getting the rate cuts? Nobody knows. I believe our new normal is 6 and 7%. And those 3% rates, 2.5% rates, 4% rates were transient to the times of the COVID era. How are you guaranteeing a return? When an investor can go take their 100 grand and put in a money market account with Schwab for 5%, no volatility, and take it out at any time. Most syndications require 5-year, 7-year, or 10-year hold. How can I guarantee that return to be competitive with a money market, which you, again, zero. So think about that. Zero volatility, 5%. I have to at least produce 7, 8, 9, 10% out the gate. How do I do that on a value add deal? I'm not buying like stabilized assets, triple net, to where like I'm all fixed cost. I'm buying value add because that's how the major appreciation works, right? Buy it here, the NOI's here, the profit's here, improve it to here. How do you produce that return? And a lot of these guys and gals do prefs. So that means we are giving you a preferred return before the syndicator makes money of 9%, 10%. How are you doing that? Insurance isn't getting cheaper. Taxes aren't going lower. Inflation is not going away, which means cost of goods, cost of labor, cost of maintenance, cost of flooring, cost of toilets. It's not going down. How are you guaranteeing this return to be competitive with what the bank can offer? That's what has made me hesitant, because I know when you do something in this world, you get one shot to make a first impression. I've made some level of first impression with people to where they have inquired about our success and wanting to partner with us. But if and when we go to raise money, if I don't deliver a home run, we're done. If too many people, and this isn't just syndicators, this is entrepreneurs, businesses in general, they promise a unicorn, they deliver a donkey. You got to deliver on the first time you do it. And that's where I'm just curious. I wonder how these syndicators are able to do this in today's challenging environment. As for my wife and I, we know the game plan. $8,000 for lawn and snow. Oh, well, we might not cash flow on that apartment this month. Oh, well, we know the long-term play of it. How do you explain that to an investor who gave you their $100,000 and need a return on that?
For you as a potential syndicator versus what your current status is, being kind of lean and mean, you have your system and process in place, it's becoming profitable for you. Is there really even that much of an upside?
Dude, you hit the nail on the head. That's the challenge we have. I was just speaking to someone yesterday, great guy. He's like, I would invest a significant chunk of change with you guys, but here's my expectations. Here's the types of returns I'm looking for. And I sat with my wife. I'll be honest. So this is such a great timing, dude, because it's extremely relevant. I'm trying to be transparent with you guys. I'm like, we could get into a very large asset. And syndicators charge fees. Again, not knocking them. They should charge fees. Just like if you have a money market account with JP Morgan Chase, they charge you fees. That's how that investor, banker makes their money, on the fees. Same thing with a syndicator. They charge fees. That's how it's very lucrative. So trust me, I've looked at the deals and the fees I could be charging. It is very enticing because that's just profit to me, to my business, to my company. But that's exactly the discussion we've had, my wife and I, is we answer to each other right now. We don't have to file SEC reporting. We don't answer to investors. We answer to her and I. And then we're responsible for our team. And the rate we're going, we're 33. We want to get to 1,000. Our last one was 56. We know if we just buy 1 to 2 good deals a year, we're going to get to where we want to be. I say this in a loving, humble way. I don't need outside money. Now, can I go faster with outside money? Of course. Back to where I don't agree with these. I went to a Michael Blanc seminar, guys and gals. I'm broke as a joke right now. I can't even manage my own money, but Michael Blanc says, become a millionaire through syndication and you just charge fee and fee and fee and fee and fee and then hand it off to a third-party manager. I don't agree with that because I believe if you're syndicating, you should be involved in that deal, running that deal, operating that deal, and living and dying with it. So yeah, that's the challenge. Do we stop a good thing right now? And in my life, I've really struggled with the grass is greener on the other side. And I'm trying to really say, I think the grass is really green right now, but I also struggle with, I want to help a lot of people. I understand not everyone, and this back to like the hate on YouTube, because people just go, because we talk about my success stories with our properties. I just read like 5 negative comments today before coming here, which was the wrong thing to do. But it's like, BRB going to get my $200,000 in the bank. I don't apologize that I busted my ass and I made millions of dollars when I started from nothing. I don't apologize for that. I'm also aware not everyone can do that. I'm not saying that I'm special. I'm not, but I didn't have kids. I had a supportive partner. I do believe God's given me a level of skill set and talent that I was able to work very hard with and develop. I understand not everyone can do what I did. So for the person who's done well in life and maybe doesn't have $1 million in the bank like I did to start investing, but has 50 grand, who can't go operate because they work a full-time job and they have children. They don't have the bandwidth to go talk to the brokers and do all the things I've done. They don't have the network to do what I've done, but say, I want to have a piece of this. I get that. And I want to help them. So that's the conundrum I'm in. Again, I just respect their money so much that I know if I do it, and this is a bit of the perfectionist in me, if I do it, I got to do it right. And I've seen more deals that don't pencil out these days, and I've seen deals that do. So the last deal I bought was October. It's February. I've looked at so many deals. I'm like, I can't even make a return for me. How am I going to produce a return for them? Again, throwing no one under the bus, but these syndicators, they need a team and they have payroll. They only get paid if they do deals. So do they have your best interest in mind? And again, I'm not saying everybody, but just think about that. I have a company, I have 20 people I need to pay. We haven't done a deal in 8 months. We need to go do deals. Maybe it's not the best deal, but we got to go do deals because I got people to pay and I need to make money. Are they really a fiduciary at that point? I have nothing but respect and admiration for those who do it right. But I hope this informs you.
So Tony, as we're kind of wrapping this thought up, if somebody out there wants to invest, what are some questions they should ask their syndicator?
Great question. Number one, what's your track record? How many deals have you done? Show me your deals. If they say, I don't have a track record, does anyone on your team have a track record? Who do we trust on this deal that you've done it before? That's number one. Number two, is your money in the deal? Mutual alignment of interest. What skin do they have in the game? And if they just take their fee and roll that into the deal, and then charge more fees, is that really their money? Oh, it's the investor's money. Again, I'm just saying, to me, I would ask that question. Number three, Who's running the deal? Is your team running the deal, or are you handing it off to third-party managers? I am telling you, and again, no knock to third-party managers. They don't care about it the way you do. They don't care about the investor's return. The third-party manager cares about their return, their money. So I would ask that. Number 4, what's your fees? Break down your fee structure, which is all part of the PPM anyways, private placement memorandum. They're going to disclose that. But number 5, have you ever lost money? Have you ever lost other people's money? A couple of key questions. And then I would say, what's the play on the deal? And I would bring up, hey, interest rates are really high. How are we going to produce a return? What's the play? How long are we holding the deal? What's that? I think now more than ever, what we call LPs, limited partners, investors have more power than ever before because there's more syndicators looking for money than there are, viable deals right now. So those are just some of the questions I would ask. And then your level of comfort based on the responses. So guys, again, nothing but admiration and respect for syndicators, for private investors, for property management. We're all about love here, man. We're all about love and support. What do you think? Have you invested in a syndication? Why or why not? If you did, how was your experience? Tell me about it. Did it go good? Did it not go good? What do you look for in a syndication? And then number 4, would you invest with my wife and I? If we ever did open up on a deal, would you invest with us? Why or why not? And if you did, what's your level of expectation of investing with us? Leave a comment below. As always, we appreciate you being here. We'll talk next time. All right, so if you enjoyed today's episode, we want to hear from you. We want to get your feedback. I love when we get comments. I love when we get feedback. I hate just doing a video and not hearing from you. So here's what I want you to do. Number 1, drop a comment. Did you like it? Did you not like it? What do you want to see more of? What are your thoughts? If you have any questions, put them below. If you notice, guys, I respond to all of my comments personally, and I'm always going to do that. So drop a comment below. Be sure to like the video because it helps us get to more people on YouTube. Be sure to share the video. If it's helpful, please just share it with a friend. That would be a huge value add to us. I have a couple free resources for you. Number 1, if you want to learn more about wealth creation, the mindset around wealth, how I went from working in my business, building a business, to investing into real estate, all from starting from scratch with food stamps, Chapter 7 bankruptcy. Get my book. It's called The New Rules to Financial Freedom. It sells for $19 on Amazon, but you can get it for a free digital download by clicking the link in the description. If you want to learn more specifically about real estate investing, the BRRRR strategy, how we've grown our portfolio, I have a free masterclass that people pay $3,000 to come live in person in California to learn in person with me teaching that room, but you can get that masterclass for absolutely free by clicking the link below. Finally, if you want to invest into real estate in Michigan, and maybe you're from Michigan, maybe you're not from Michigan, or you want to learn more about our brokerage, the Stephan Group, and either join our team as an agent, invest with real estate, or have us help you get into cash flow producing real estate, click the link below, Stephan Group Real Estate, fill out that quick expression of interest form. Someone on our team will reach out to you, set up a call, learn more about you and your goals, see how we can add value to you. Until our next episode, thank you so much for being here. We'll talk soon.